I'm Poppy Behrens, co-publisher of Minico Publishing, and we're delighted to have you in the audience today. This is one of several informative webinars planned for self-storage owners, operators, investors, developers, and other industry professionals. The sponsor of today's webinar is Tom Litton, well-known industry expert who heads Self-Storage Management Division of Litton Property Management and Consulting. Mr. Litton began his self-storage career when the industry was in its infancy and has managed over 150 self-storage facilities in 11 states. He currently manages and/or owns 21 commercial properties in Indiana and California, and in addition, he fee manages and consults on a daily basis in the United States, Australia, New Zealand, France, England, Scotland, and Canada. Mr. Litton has conducted over 150 seminars worldwide on various topics regarding self-storage operations, management, development, and ownership. He has written over 100 magazine articles in 5 different publications and has written numerous books and operational guides that are sold daily throughout the industry. His newest book, Auditing Self-Storage, Preventing Employee Theft and Embezzlement, is available through Minico Publishing. This January will mark the 30th anniversary of the Mini Storage Messenger published by Minico Publishing. Mini Storage Messenger provides the self-storage industry with in-depth news and information, and each issue of Mini Storage Messenger offers cover stories and feature articles on the most timely industry topics and trends. Monthly columns contributed by industry experts and accomplished business professionals address a wide range of topics including security, facility operations, technology, legal issues, legislative updates, construction, and development. We also publish a variety of other self-storage data. For more information, please visit ministoragemessenger.com. We invite you to submit questions throughout the webinar. To do so, simply type your question in the question area and click Send. Depending on the question, we will answer it privately or to the entire group. We will also try to answer as many questions as we can during the Q&A period at the end of the webinar. Those that are not answered will be answered by email after the webinar. This webinar is being recorded and will be available for viewing on demand from our archives at ministoragemessenger.com. Today's presentation should run approximately 45 minutes with the remainder of the hour open to questions. Now I'd like to turn the presentation over to Tom Litton. Good morning, Tom.
Good morning, Poppy. How are you?
And thank you.
I see. Well, let's get started. Melissa, do you want to put up the PowerPoint presentation? There we go. Okay, let's talk about preventing employee theft. One of the things that I've done is I've written a book about how to audit storage facilities. The primary emphasis of the book is preventing employee theft by detecting employee theft through various embezzlement techniques. But the reality is that auditing a self-storage facility is something that needs to be done as part of routine business operations. So though the book emphasizes some theft and embezzlement discovery techniques, the book is really designed to assist the would-be auditor in actually auditing the self-storage business, which should be a part of just your daily operational routine. So what we're going to talk about today is a whole host of topics. We're going to get into a few specifics, but for the most part, we're going to just focus on some of the general concepts about auditing a storage facility and what you can do to prevent employee theft and embezzlement in your storage facility. So let's talk for a second on some current trends that I've seen sort of occurring in the self-storage industry over the last few years. To give you a little bit of background, one of the things that I do, in addition to managing self-storage facilities and conducting seminars all over the world, is I have a part of my business where I focus on self-storage audits. I do a lot of routine audits for larger companies, and then I'm oftentimes called to audit smaller storage facilities that believe that they may or may not have a theft problem going. So over the years, I've now conducted over 500 audits worldwide, mostly in the United States, but I've also conducted audits in other countries too. So most of what I have learned about auditing, much less the detection of theft and embezzlement, has been a result of just experience in the field. So I still audit storage facilities. Obviously, I audit all of my own properties, but in addition to that, I still audit self-storage facilities on a consultative basis literally every month. So, for example, just this month alone, I've already done 2 self-storage audits other than the storage facilities that I either own or manage. So in the process of doing that, I noticed that there are several trends that seem to arise in the self-storage industry. And some of the trends are kind of interesting. I think the most notable one is the fact that lawsuits are on the rise. And when we talk about auditing, we're talking about getting into the storage facilities records, getting into the files, but getting into the policies and procedures that are being used at a self-storage facility. And in the process of doing that, you're going to find that there are problems that are occurring at the self-storage facilities. We're going to talk about some of those problems. But one of the biggest problems that I see as a full-time self-storage auditor is just mistakes that are being made primarily in the lien foreclosure process in various states and in virtually every single self-storage facility. And what's happening now is that the economy is in a time where we're in crisis, and self-storage customers are looking for any way to raise money, if you will. And so if you get on the internet at any time, do a Google search, type in self-storage lawsuits, you're going to see that self-storage lawsuits are proliferating everywhere. The most common self-storage lawsuit that we see in this industry is what we call the wrongful sale lawsuit, and that's where storage facilities in the process of foreclosing on their liens have to follow various statutory guidelines. And the doctrine of strict compliance, which is it's a legal doctrine that almost every state adheres to. And what the legal doctrine says is that since the legislature gives a self-storage facility a specific lien foreclosure remedy, the self-storage facility has to follow that remedy without fail. And so what happens is self-storage managers make mistakes in those lien foreclosure files. Sometimes it's an address mistake. Sometimes it's just a mistyped mistake when the data is entered into the computer. But there are mistakes being made every day, and part of the audit process is to uncover what those mistakes are and then to coach the managers on how to avoid those. So lawsuits are on the rise primarily because of this economic slowdown. So it's even more incumbent now on the self-storage auditor to audit the storage facility, if nothing else, to just uncover some of these problems. The internet has also created some whole new problem areas. I did an audit last week at a storage facility. One of the first things that I do when I audit a storage facility today is that I actually run various detection programs on the facility's computer to see if there's a problem with viruses, what we call Trojans, hijackers, adware, and a whole host of other types of computer bug problems that detection software will find on your computer. When I did an audit just the other day, I noticed that the facility had a virus called a hijacker. In other words, it would take over the keyboard and it would direct the manager to a particular website. But that particular facility also had what's called key logging software that had been downloaded by mistake by the manager. And what a keylogger does is a keylogger actually monitors and records every keystroke that's made into the keyboard. And then it will periodically email back out a file of all of those keystrokes to some individual, obviously a hacker on the outside. And what they're looking for are 16-digit numbers, like Visa and MasterCard numbers, or 15-digit numbers, like an American Express number, and then they look for expiration dates and then the name of the customer. And then they use that to order things on the internet. So this is a new problem that we've never really dealt with before in the self-storage business. So one of the first things I now do is I scan for viruses And then my virus scanner looks for Trojans, hijackers, adware, and things like that. Another problem that we see today when I conduct audits is emailing by employees while they're on duty. Most companies have a policy against emailing when a customer is working during their normal business hours. The other problem that we see with email is that email is notorious for downloading viruses and Trojans and hijackers, adware, and other type of outside invaders into the computer system that you just simply don't want. And then the other problem is what we call web surfing. I audited a facility about 3 weeks ago, and I looked in the temporary internet folder and noticed that the manager had been surfing on the internet almost all day from the time that the individual came in the morning until they left in the evening. This particular individual only went to what I call good websites. They were wholesome, clean websites, but the problem was is they were surfing on the internet most of the day. And if you have time to surf on the internet, you obviously don't have time to get some of the other important things done at your storage facility. One of the other trends that we now see is what we call internet-based software. For example, SiteLink has internet-based software, and that's where the software actually runs on a server, and the self-storage facility logs into the software and stays logged into the software all day. You know, CenterShift was probably the very first software vendor in the industry that provided this type of platform. And there are a lot of advantages to internet-based software. Probably one of the biggest advantages is that it gives you a better audit trail, and it gives you better controls. So all of the software vendors are working towards creating internet-based software so that a self-storage owner could literally log into the software at any time from anywhere in the world, print receipts, print reports, review transactions for the day, things like that. So that's the good news. Online payments has now become ubiquitous in self-storage software. So online payments is where software vendors create a portal to the storage facility's website, and then that portal allows customers to go online to the website and to review their account and then to pay their bill online. So it's a wonderful tool. The only downside to online payments is that it's an electronic form of payment that has to be monitored, obviously. And in some cases, the online payment program options allow the self-storage facility to accept address changes via the website. And one of the things that's incumbent upon the management is to make sure that that address change is actually made in the software and that the address change is emailed back to the customer acknowledging the fact that an address change had occurred. So it's a wonderful tool, but once again, it's something that has to be controlled. And then I've noticed over the years, especially the last few years, that there are several new embezzlement techniques that have arisen. And all of those embezzlement techniques are basically a result of changing technology. So well, hopefully today we'll talk about some of those, the new embezzlement techniques and how technology has impacted the way that we now audit self-storage facilities. So let's talk about what we're going to cover today. We're going to talk about why you should audit a storage facility, who should be the auditor, when should audits be conducted, and I'm going to touch briefly on some of the embezzler's techniques. When I talk about the embezzler's techniques, some of the techniques are very complicated and intricate. So we're going to talk about just a few of the embezzlement techniques. If you decide to purchase the book, there's a lot more detail in the book about specific embezzlement techniques and then how to uncover those. But we're going to touch on some of the embezzler's techniques today just to kind of show you some of the things that are going on. We're going to talk about the danger signals. This is a list that I compiled, and I've been using it for years. And I tell self-storage owners that if 2 or more of these symptoms are appearing at your self-storage facility, you probably have a problem. If 3 or more are appearing, I can guarantee you have a problem. So we're going to talk about those danger signals, but more importantly, we're going to talk about what we can do to protect ourselves. So let's talk about why auditing, or why you should audit your storage facility. If I could get my slide. Okay, number one is to discover a little bit of a lag here. Number one reason why you want to audit a self-storage facility is to discover theft and embezzlement. Now, it's not uncommon for self-storage facilities to experience theft and embezzlement problems. And in the process of conducting an audit, you may occasionally discover theft and embezzlement. But the primary reason why we audit self-storage facilities is to determine compliance with policies and procedures. I've noticed over the years probably one of the biggest problems that we experience is really not so much from theft and embezzlement as it is from mistakes that are made. And the mistakes are usually part and parcel of lien foreclosure processes or just simply rental agreement issues. So one of the biggest reasons why you want to audit is to determine whether or not the managers are complying with the policies and procedures that you've established at the self-storage facility. In the process of doing that, you may discover theft and embezzlement. The third reason that we audit is to determine compliance with the lien laws and to avert lawsuits. We'll talk in a few minutes about how often this comes up, but over the years when I conduct an audit at a storage facility, one of the things that I do is I look at files that have already been closed out, in other words, units that have already been sold. And when I look at those files, I find lots of problems, especially in this area of strict compliance with the lien laws of the particular states that we operate in. And then lastly, you want to audit because you want to create an atmosphere of deterrence. If you don't audit a storage facility, the employees believe that you're not looking at anything, and if they believe that you're not looking at anything, you're going to have a problem. One of the most common questions that I get is, does self-storage as an industry have a theft problem? Well, I think it does, but I also know that all businesses have theft problems. I've also done audits for Blockbuster Video and Target stores. And retail stores probably have a much bigger problem than we do. But I'm estimating, just based upon my own experience, that about 15% of self-storage employees steal from their employer. And this is just outright theft of monies. I'm not talking about just time, for example, talking on a cell phone or sending in a personal email while on company time. I'm just talking about just cash thefts. I estimate that about 15% of self-storage employees steal. Now, why is that true for self-storage? Well, I think it's because self-storage is, in a way, the perfect breeding ground. Why do I say that? Well, 5 to 15% of all of our payments are in cash. And as a matter of fact, if a customer is delinquent, we demand that they pay in cash. And we'll talk about that here in just a little bit. I don't know that we can do anything about that as an industry other than control it better. The other reason is that self-storage managers have very little direct supervision. It's not like working in a cubicle-type office where there's a lot of direct supervision every day. That's part of what storage managers like about their job, but that's also what makes the industry more vulnerable to theft problems, is that we don't provide a lot of direct daily supervision. The other one is that teams are used to staff self-storage facilities. It's still pretty common in the industry. And when you have a team working together, it's much easier for those individuals to collude, and in other words, to cover for one another and to perpetuate theft. When you look at just the sheer volume of transactions in the self-storage industry, we actually deal with a very high volume of transactions. So, for example, the average storage facility in America is roughly 500 units. Multiply that times 12 months in a year, you've got 6,000 transactions. It's not difficult at all to take 20, 30, 40, 50, or even 100 transactions and to hide those or to convert those into cash when you deal with 6,000 transactions per year. So as an industry, our transaction volume is much higher than the apartment business, for example. We also have rather complex software using cash basis accounting methods. In other words, our software does more than just account for payments. Our software generates letters, it generates notices, it also generates multiple units with multiple names. So the software that we use in self-storage is rather complex, and it uses cash basis accounting methods. In other words, income is only received when it's collected. Of course, expenses are only recognized when they're paid. Now, self-storage software programs basically deal with just the receipt of cash only. And so the cash basis accounting method makes it easy for a self-storage embezzler to shift money around to different months or to completely hide money altogether, which I'll show you an example of that in a minute. The other problem that we're running into is that because of the economy, a lot of storage facilities are offering a lot of concessions and discounts. And when you have rampant concessions and discounts, it's much easier for a thief to steal, because what they do is they take a customer that walks in the door that would normally just pay full price for a unit, and they walk into the office and they pay in cash, and then they enter into the computer software that they gave that person 50% off the first month or 25% off the first month, and they simply pocket that cash. So that's because in the self-storage industry we have a tendency to have too few controls. So we're going to talk about some controls today that will help prevent some of those problems. Everyone has the capacity to steal. Over the years, I've had several instances seen self-storage managers embezzle from their employer. And I've actually been quite surprised. I actually found a couple that was embezzling. They were in their early 80s, and I think that they probably had all of their life been the most honest people on the planet. But their son had been arrested for drunk driving, and he was sitting in jail. He called his parents and said, I really need some help. I need you to bail me out of jail. So they temporarily borrowed some cash out of a deposit. And of course, lo and behold, I had been retained by the owner of this company to routinely audit the storage facility. And, as fate would have it, I walked in the very next day after this occurred. One of the first things I do is to check deposits in transit. And then when I asked about the missing $310 in cash, they broke down and admitted that they had borrowed the money, and that they were going to put the money back when they got paid. So it's not a question of honesty. It's a question of opportunity. Given the right circumstances, I believe that virtually anyone can be tempted to steal in a situation like this, because when your kid calls you from jail or the IRS is pounding on your door, those are issues that can question your honesty. It can test your honesty. I do believe that most people are honest, but it's not a question of honesty. It's a question of opportunity. So what we try to do in the auditing business is to remove as many opportunities as possible. The other thing that I've noticed, which is actually quite disturbing, is that many managers are repeat offenders. I actually have one couple that I've caught 3 times. I have one male individual that I've caught 4 times. He's very articulate. He's very bright. He's the type of a guy that you would hire him in a heartbeat. He knows storage talk. He actually builds websites for the facility and monitors the website. So he's the type of guy that if you hire him, you feel like you're saving lots of money. He's a good small team leader. He has almost all of the attributes that we look for in self-storage except for honesty. So many managers are repeat offenders. That's why it's really important to do a background check on every employee that you hire. And as a matter of fact, a lot of tenants are now suing storage facilities under the theory of negligent hiring, because storage facilities are not very good at this. So I can tell you from experience, conducting over 500 audits worldwide, there are a lot of repeat offenders out there. So as an industry, we need to do a much better job in doing background checks on employees. And then managers know whether or not you're looking. If you are not looking, you create that atmosphere of opportunity. So hopefully after today's session, you'll be more devoted to maybe going home and setting up some control systems, or at least giving your managers the impression that you're actually looking. Let's talk about policies and procedures. The greatest threat, by the way, is not theft, but costly mistakes. One of the reasons why I audit my own facilities so vigorously all the time is that I'm not so much worried about theft and embezzlement, because I have a system that I'll share with you in a few minutes that I think helps minimize the possibility of a lot of rampant theft and embezzlement occurring. But the biggest reason why we need to become better at auditing our properties is that the greatest threat is mistakes being made by the managers, especially in this area of lien foreclosure. Self-storage management tends to be less structured than most other businesses. So we have a tendency to have sort of a hip shooting style when it comes to managing self-storage facilities. So oftentimes I find that most storage facilities, the overwhelming majority, do not have policy manuals. They do not have procedures manuals. And the policies are actually determined by the managers on an ad hoc basis. So as an industry, we need to become more structured in establishing policies and procedures that employees can not only refer to, but they can easily adhere to, but they have to be there, they have to be in writing. For example, I did an audit at a storage facility in Australia, and the owner was suspicious of this one particular employee. I went and audited the facility. I confirmed the fact that this individual had been stealing from the company. The individual was then terminated from the employment of the storage facility. That individual went to the government entity in Australia that is similar to our labor board here in the United States and complained that she was terminated for theft, but the company did not have a policy against theft, which is kind of funny when you think about it on the surface. And the owner got quite a laugh out of it, but at the same time he said, "Tom, you just have to understand this is Australia. This is the way it is." And so the company was actually forced to hire that individual back. The company put the individual in a position where they really had no access to payments anymore. And the individual actually voluntarily left the company within less than 30 days. But that particular storage operator realized that they had to have something in writing. They had to have more structure in their business. Most self-storage policies, by the way, are not documented. Very few policies, as a matter of fact, and yet we're an industry that we have scads and scads and scads of policies. What happens in most cases is that the employees actually create the policies ad hoc, and that's not good. When I look at rental agreements at self-storage facilities, I take a random sampling, and occasionally, if I have time, I will literally look at every single rental agreement. And I find that 50% of all rental agreements have some problem that negate their effect, and in some cases invalidate them completely. For example, I don't think I've ever audited a storage facility yet where I didn't find at least one or more rental agreements without a signature on the rental agreement at all. Loose procedures make the life of the thief much easier. So if you have loose procedures or you have written procedures but you never verify whether they're being complied with, you're making life much easier for the would-be thief. Lack of clear procedures is the breeding ground for mistakes and lawsuits. So if you don't have clear procedures, a clear procedure would be a way in which a particular transaction is handled. If you don't have clear procedures, you are creating a breeding ground for not only mistakes, but potential lawsuits. And once again, remember that lawsuits are on the rise. 50% of our procedures are dictated by our software, which is the good news. The other 50% is dictated by the company, and that's assuming that the company takes the time and to codify those policies and procedures in writing. So procedures are not followed unless they are monitored. I audit storage facilities all the time, and I ask, do you have a procedures manual or an operations manual? And the manager goes, yeah. And they pull the operations manual or the procedure manual out of some obscure corner of the office, blow the dust off, and then open it up for me. So procedures are no good if they're not followed or monitored. And, of course, that's part of what we're going to do in the audit process. So there's a theory that I have. It's called the management triangle. And I find that when I go to storage facilities and I audit them, one of the first things that I do is I look to see if the software at the storage facility is in congruence with the contract and whether the contract is in congruence with the operations, in other words, the across-the-counter policies and procedures that are being used. And more often than not, as a matter of fact, I have yet to find a storage facility in America yet where the software, the operations, and the rental agreement, all three have congruence. So this is what I call the management triangle. In theory, your contract should mirror your software. Your software should mirror the contract, and your software and your contracts should mirror your daily operations. It's rare that I actually find this. For example, the other day I audited a facility, And I walked in and I sat down, I looked at the facility software, and I looked at the late fees that were charged and then the days in which the late fees were actually charged. Then I asked the manager to look at the rental agreement. I looked at the rental agreement, and the rental agreement said something completely different than the software. So I brought this to the manager's attention. The manager then said to me, she goes, well, I know the contract says that, and I know the software charges it on this day, but the old company that I worked for, we didn't charge the first late fee until the 14th day, so that's when I actually charge it. And I said, well, you should be following what's in your contract and in your software. Those two obviously have to agree. And while we were sitting there talking, I saw a sign on the office wall, and I looked up, and it said the high cost of paying late, and then it had the dates in which various charges were charged and the dollar amounts, and the sign on the wall didn't match the software, didn't match the operations, nor did it match the contract. So we had 4 different confusing signs in the office, or one sign in the office, but 3 different operations going on, and none of those were congruent. So it's important when you're auditing a storage facility, take the time to make sure that your contract matches your software and that those two are in congruence and that they're matching what's actually happening across the counter. Once again, it's rare that ever find that this isn't a problem here, even at storage facilities that are highly organized. So you want to take the time to follow up on this. The management triangle says that the rental agreement is the controlling document. All other procedures should support the rental. So whatever your rental agreement says, your software should work in conjunction, and it should mirror the rental agreement, and then therefore the rental agreement and the software that you're using should mirror what you do across the counter. Operations, the rental agreement, and the customization of the software should all 3 be in alignment. Most facilities, believe it or not, are not congruent until you check it out. Approximately 24% of all of the sold lien files that I view as an auditor have problems that are so serious that if the facility were to be sued, the facility would lose. Now, when you think about it, that's a scary number. In other words, 1 out of 4 lien sale files, and these are files of individuals that have already been sold, have serious problems. And this needs to be monitored much more closely. This is one of the reasons why we need to audit more. The mistakes that are being made are actually simple and easy to avoid. The most common mistake that I see is the undocumented address change or simple typing errors. One of the things that we have to do in self-storage is in virtually all states we have to send out certified letters, and some of those documents have to be completed by hand. And I find lots of mistakes where the software print the letter out correctly, but when it was transposed onto the receipt for the mailing, the certified letter, or some other document, there's transposition errors and things like that being made. So the mistakes that we're making as an industry are actually pretty simple, and they're easy to avoid. So remember, lawsuits are on the rise. Customers are now looking for any reason to sue you. What about deterrence? Well, one of the best ways to deter theft is to have proper controls and to create an atmosphere of deterrence. Spot checking is better than looking at every single document. Why? Because looking at every single document it's costly and it's time consuming. And most storage facility owners don't have the time nor the inclination to literally look at every single transaction. So spot checking or random sampling is just as good as looking at every single document, but you have to take the time to sit down and actually do this. So auditing policies, procedures, and transactions prevent legal problems, which is a much greater threat to our industry theft. So really, who should audit? Well, the property manager or the manager, they know all of the players, they know the operations, they know the intricacies of the business. Property managers and area managers are usually the most qualified in terms of being able to audit a storage facility. The problem that I've seen with property managers and area managers is that they need to have a more formal approach. They need to have formal audits at formal times, and they actually need to sort of work from an actual checklist or an actual guideline and actually write the results up so that we ensure that they actually look at everything that they need to This would be true for the owner. If you're a small owner, you don't have a property manager or supervisor, then you're going to have to fulfill this role. Outside auditors are good. This is the type of thing that I provide for self-storage owners. Most of the people that contact me hire an outside auditor because they are suspicious that theft is occurring, and they may want to actually prosecute the individual. Outside auditors are also good because we have no preconceived ideas as to what your employees are about, and we will have the perspective of the outside world. When you're in storage long enough, you become myopic, especially about policies and procedures. Accountants and CPAs are pretty good auditors. If they understand self-storage lingo and jargon, they can be very good. But I think probably the best person to audit storage facilities would be the accounting staff. You know, the gal that does payroll and that actually pays the bills for the storage facility and reconciles the bank accounts. Those individuals are usually your best auditors. So when should audits be conducted? Audits need to be routine but unannounced. So you want to make sure that you vary your times throughout the year. It doesn't do any good to always audit your storage facilities in June and October, and for your managers to understand that's when it's going to be done. So you want to break it up and you want to vary your times throughout the year. You always want to share the results of your audit because remember, most managers are not stealing. And an audit serves no purpose whatsoever if we all don't learn from it. So it's important to share the results of your audit with the employees because audits are training tools. The most vulnerable time of the year for an audit is April, income tax time. This can be critical, especially from mid-March to right up until April the 15th. Why is it more vulnerable than any other time of the year? Because storage managers have a tendency to under-withhold on their withholding allowance with their employer. So what happens is they calculate their tax liability. You know, owe the IRS $1,000 or $2,000, something like that. So that can be a vulnerable time. Christmas is pretty obvious. You have the pressures of gift giving, so that's a vulnerable time of the year as well. Believe it or not, one of the most vulnerable times is immediately after an audit, and this is especially true if you had suspicions and you audited the facility, you didn't find anything wrong, but something told you that something just wasn't right. Turn around and go back and audit the facility about 30 to 45 days later. What will happen is that oftentimes you will see theft and embezzlement escalate immediately after an audit because they may have gotten wind that the auditor was coming and they shut everything down. And then after the audit was conducted and nothing was said, they thought they're in the clear. So sometimes you'll see theft and embezzlement just skyrocket immediately after an audit. Anytime you discover that there's personal turmoil or crisis in a manager's life, you want to conduct an audit. And it's a good idea to always conduct audits prior to scheduled vacations. You should always audit anytime you have a suspicion. In other words, trust your instinct. Most of the time, your instincts are correct. Where there is smoke, there is usually fire. So don't ignore the problem. I see this all the time. Storage owners will oftentimes hire me and tell me that they have been suspicious for months, only to find out that the theft and embezzlement had been occurring for years. Now, what are some of the embezzlers' techniques? I'm going to touch on these real quick. We don't have a lot of time, but I want to show you just some of the things that managers do and how easy it is if a person is really hell-bent, if you will, on stealing money. The most common technique is what we call the mystery unit, the secret tenant. The tenant doesn't know that they're a mystery tenant because they are treated just like they would be treated if they were legitimate. The mystery tenant is usually not entered into the computer. They're usually listed in the computer as company, damaged, unavailable, and sometimes reserved. Sometimes I've seen managers actually take units and put them on reserve. Now, why would you go in and change the status of the computer? Because you wouldn't want your assistant manager to take another customer down to the unit and attempt to show what they think is a vacant space only to find a lock on the door. And they might pick up the phone and call the property manager. So oftentimes what happens is when you have a mystery tenant, the manager will actually change the status to company damaged, unavailable, or sometimes they'll completely take it out of the computer altogether, or they'll list it as reserved. The manager can then convert that customer's payment if it's a check or a credit card, easily into cash by using 3 basic methods that we're going to talk about here in a second. The only way to catch this is to conduct routine lock checks or inventories, and that's where you, as a property manager or an auditor, actually walk out to the facility, literally walk by every single door and note the status. Now, if you rent a space to a customer and you treat them as a mystery tenant and they pay in cash, no problem. You put the cash in your pocket. If they pay you with a check or a credit card, you then have to use one of the laundering techniques. One of the most common laundering techniques is what we call check cashing. Check cashing is where you just simply take a check and you slip it into the deposit. You pull the base amount of the cash off of the check and you stick that in your pocket. So, for example, if you look at this sample, the deposit slip shows 5 checks and cash of $100 with a total of $483. If you were to look at the daily cash journal printed by the software, you would notice that there was actually $190 in cash for that day, and there were only 4 checks. So if you have a mystery tenant that writes you a check, for example, for $90, all you have to do is take that $90 check, slip it into the deposit, pull $90 off the cash. Your grand total will appear to be normal. And most bookkeepers look at the deposit slips, they look at the daily cash journal, and if the numbers match, they think everything's okay. So we call that check cashing. The other one is what we call a split entry. A split entry is very similar. Remember that we're sitting on a $90 check that a mystery tenant wrote us, and we want to convert this $90 check into cash. So what do? We wait for a customer to come in and that actually pays us in cash, and we actually split the entry out. So if you look at Ramsey number D19, you'll notice that there was $100 in cash, $90 in check. Now, Ramsey actually paid $190 in cash. But what the embezzler did is they needed to launder that $90 check. So they took the $90 check and they just slipped it into the deposit. If you'll notice on the deposit slip, it's unit F90 for $90. They take the $90 out of Ramsey's cash, they put it into their pocket. You look at the grand total on the deposit slip, it's $483. The grand total on the daily cash journal is $483. The bookkeeper thinks everything is okay. This is what we call a split entry. So accountants and bookkeepers, when you're looking through what we call the dailies, the documents that come from the facility, one of the things that you look for that is suspicious but occasionally legitimate is what we call the split entry. The split entry is where a customer pays with a combination of check and cash. Check lapping, once again, this one's really hard because essentially what happens is the $90 mystery tenant check is just simply lapped onto the account of a customer that normally pays $90 in cash. So this one's really difficult to trace unless you make a photocopy of every single check in each deposit and then you match those back to the daily cash journal. Check lapping is the most difficult embezzlement technique to uncover unless you make photocopies of the checks, which we'll talk about in a minute. So what are the embezzler's techniques? Well, I'll go through these quickly. They're kind of interesting. If you buy the book, by the way, you get a kind of a detailed listing of these with a lot of explanation. But when you think about it, these are all, pretty commonplace. Cherry picking and pack writing. That's where the manager goes in to a storage space just prior to the auction. They take things out that they want, and then they put a seal back on the door. The next day, the auctioneer breaks the seal, opens the door, sells the unit, and everything, evidence included, is now disappeared and gone. Past posting is an embezzlement technique where customer walks into the office, and this is true at storage facilities that prorate everyone to the first of the month. Customer walks into the office, pays in cash. Computer says the person owes $78 to pay them from now until the end of the month. Well, the manager doesn't put them into the computer. They list it as reserved, damaged, unavailable, or some other designation for that particular unit that takes it off the vacant space list, and they wait for days to pass. If they wait 5 days or 10 days, they ask the computer how much would it take to move the person in today, prorating to the first of the month. The computer is going to ask for less money than it did 10 days prior. So this is called past posting. In other words, collecting money and then holding the money and posting it later in the process. Remember that every day that goes by, the computer is going to ask for less money that actually has to be posted on a new rental. Reversals is another common. A cash check reversal is let's say that I have a mystery tenant check for $90 and the guy walks in the door today and pays me $90 in cash. I will take the cash payment, I'll post it to his account, I will give him a legitimate receipt. After he leaves, I will reverse his cash payment and I will replace it with a check payment for $90. I've now laundered a $90 mystery tenant check. Skimming is where managers just simply skim late fees. So customer walks into the office, they're late, customer pays it, they don't quibble about it. Sometimes they pay in cash, sometimes they pay in check. It's easier if they pay in cash. So the manager will take the $20 late fee or the $10 late fee. They'll pocket the cash and they'll write it off in the software as a fee waive. Non-journalized entries. That's where the managers on manual bookkeeping systems, and believe it or not, there are still a lot of manual bookkeeping systems out there. Managers will take manual bookkeeping systems and they will enter on the ledger, the individual ledger, the payments of customers, but they don't enter it on the ledger. The ledger is what the owner looks at and determines how much income was deposited for that month. So we call those non-journalized entries. Hold and loan is a technique where a manager will hold deposits and then they will, quote, borrow cash out of the deposits. Eventually what happens with most hold and loan incursions is that the manager eventually starts just stealing the money outright. Another one is what we call entrepreneuring. Entrepreneuring is where managers have outside jobs. They engage in prostitution, multi-level marketing. They work second-hand flea markets. These are all things that embezzlers do while they're still on the payroll of the self-storage facility. Data manipulation is a whole new frontier. We talked about split entries. That technique, by the way, splitting the entry out, is literally allowed by every single software package on the market because it does occasionally happen. Shorts and write-offs, that's where you simply vacate a customer and then you write it off as if you never collected the money at all. The reality is it may have been a delinquent tenant that walked in the door, paid you $300, but instead you pocketed the $300 and you wrote it off to uncollected rent, uncollected fees. Restoring data is another technique that you see at storage facilities that still use PC-based software at the storage facility itself. And that's where the manager will go back on the assistant manager typically, and they'll restore back to the previous day, and then they'll manipulate entries, close the day back out again. And then if the owner ever asks about what happened to this $300 that was collected on a Sunday, they blame it on the assistant manager because the assistant manager worked that day. So we call that restoring data. Another one is the simple size code change. That's where you take a mystery tenant and you change the size code from a 10 by 30 to a 5 by 5. The tenant pays the 10 by 30 rent. The manager pays the 5 by 5 rent for the mystery tenant, and then they pocket the difference. It's even as easy as just deleting spaces out of the computer altogether. I occasionally will audit storage facilities, and I will find units that have literally been deleted out of the system, and those are rented out to unsuspecting mystery tenants. And then, of course, a real common embezzlement technique right now is embezzling any type of discount. The discount is where you say the customer received the discount. The reality is that they didn't. Another interesting one that is sort of a new embezzlement technique that I discovered over the last few years is what we call credit transferring. And that's where a customer is moving out of their storage space, and instead of vacating the space immediately, the manager leaves the space in the computer. And when another customer walks in to rent a space that day, ostensibly, they actually transfer the credit that's left over from one unit over to another unit, and they take the value of that credit and they just simply take it out of the cash proceeds. So in other words, the tenant that moves in is told that it's going to cost you $100 to move into this space, but the manager transfers maybe $25 worth of credit over to that space. So they take the $25 out of the cash and they put that in their pocket. And then one other one I want to talk about quickly is what we call the plastic bonus. The plastic bonus is where a manager will slide a customer's credit card through the card reader at the storage facility, and then they will take their own personal credit card, slide it through the card reader, and give themselves a credit back onto their own personal credit card. I've actually seen this now about a half a dozen times, and I call it the plastic bonus. Cash soliciting. This is another common problem that I'm starting to see right now, and this is where storage facilities are offering lucrative discounts to tenants that prepay in advance. So sometimes what happens is managers will actually encourage customers to pay in advance in cash, and then they'll just simply go in and manipulate the software. And if the owner catches it, they simply explain to the owner that, well, remember, you told me to be very aggressive and to offer some lucrative discounts to fill the facility up. So what they do is they tell the customer, if you'll pay me 3 months in cash, I'll give you another 3 months in additional rent. We call it cash soliciting. Another common technique is what we call the pre-existing tenant. That's where the customer is vacated out of the software and then they're put right back in again. Now, in able to do this, most storage managers have to have master owner level password, and believe it or not, most self-storage managers have the password. So I see this a lot. Bartering, need I explain anymore? Double dipping is where you work, once again, 2 jobs. You work at the storage facility and you also work at another place. Merchandise, pilferage, and theft. Those are very easy. Customer walks in the door, buys a discus lock, they pay cash for it, they buy a few boxes. Customer pays in cash, oftentimes on small dollar amounts like that. Manager just simply takes the cash and they put it in their pocket. So there are dozens and dozens and dozens of embezzlement techniques. These are just a few that I've included here just to illustrate the type of things that are going on out there. So when are we vulnerable? Well, we're vulnerable anytime there's a change in management, anytime there's a change, especially in ownership, certain times of the year, Christmas and April for obvious reasons, or anytime there is a stressor in the manager's life. If you find out that they just got an IRS tax lien in the mail or their kids are in trouble, anytime there are stressors, then it's time to go in and audit the storage facility. Who is the most vulnerable party? Well, if you're an absentee owner and you cannot visit the facility very often, then you are vulnerable. Believe it or not, there are still a lot of facilities out there on manual bookkeeping systems. They are probably the most vulnerable of all. You can be vulnerable even with a computerized accounting system if you don't look at the reports or the audit trails generated by various software packages that are out there. And facilities in economically challenged neighborhoods, economically challenged areas are more vulnerable because the customers will oftentimes walk into the office. They will challenge the manager. They will offer cash in exchange for additional rent and things like that. But what I find in economically challenged neighborhoods is that phone numbers are usually not very good. Mailing addresses are awful. So it's difficult to follow up and determine whether or not, in fact, an individual has been stealing in an economically challenged neighborhood. And then if you're an inexperienced owner or operator, then you are definitely more vulnerable to theft and embezzlement. So what are the danger signals? Well, I'll give you some of the danger signals that I've developed over the years. And if you find that 2 or more of these danger signals are present, then you probably have a problem. If it's 3 or more, then you definitely have problems. What are the danger signals? Well, obviously, managers that never want to take a vacation. Managers who can never seem to keep assistants. It's because they usually give them the mushroom treatment. They throw a lot of crap on them and they keep them in the dark. But they do that because they want that individual to not know how to do things correctly because they need to stay in control. So if you discover that relief personnel are inadequately trained, then you might suspect that there's something weird going on at the facility. Managers that tell customers that they are the owners. I've heard this a lot over the years. Every time I have heard this, without fail, the managers have been stealing. And then obvious changes in the manager's lifestyle. If the managers start driving a Rolls Royce to work every day, then obviously you may have a problem. If you see changes in their behavior, that's usually indicative of something going on or something may start going on. This is oftentimes especially true with married couples. If you'll notice changes in their behaviors, they may not be getting along. One party's contemplating a divorce and so on, and they might be ready to bow out of the relationship. And oftentimes they will start trying to create some what I call comfort cash so that they can leave. Managers that never complain worry me more than managers that call me every day. So managers that never complain don't want to draw attention to themselves. Low cash deposits. You really want to monitor this closely. I did an audit one time in Wichita, Kansas. one of the owners came to a seminar just like this, and he said, you know, I thought about it, Tom. I went back and I called my bookkeeper, and I asked her, how much cash did we deposit last year? And the bookkeeper said, we only deposited $18 in cash for the entire year. And he says, Tom, do you think I have a problem? I said, absolutely. Also, if you see delays in making deposits, I call this deposit delay. My own accounting staff monitors this very closely. If you see more than 2 days between a deposit, my own policy with my own facilities is that I have to see a deposit made every 72 hours. If you see delays in deposits being made, it's because your employees are borrowing money or they're attempting to launder some mystery tenant payments so that they can make up the deposit and get it ready to go to the bank. Managers that fail to overlock on time, very suspicious, because chances are those individuals are showing up in the computer as being delinquent when in reality they're not. It's because managers are pocketing their payments and they're waiting for the customer to move out, and then they can just vacate them and write it off to uncollected rent and uncollected fees. Spaces that are overlocked that should not be, or managers that are too eager to hold auctions. If they're too eager to hold auctions, they could be cherry picking or pack ratting out of the units. Changes, disorganized offices. It's funny because this is a common denominator that I've seen with virtually all self-storage theft and embezzlement cases are disorganized offices. In all the years that I've been doing this, I've only audited one individual that was the meticulous neatnik that was actually stealing money. So a disorganized office tends to be indicative of someone that's engaged in something that's less than honest. If you find out that there's marital discord going on between the parties that work at the facility, you want to keep your antenna up. Managers that frequent gambling or betting establishments like Las Vegas or Indian casinos. You know, casinos are everywhere now, especially the Indian casinos. So if you find out that your managers are spending most of their free time at an Indian casino, you might want to audit that facility more often. Managers that report receiving inheritances and settlements, that's a way of explaining why they have a changed lifestyle, an opulent lifestyle, if you will. And then managers with dependents living at the facility. Dependents put more economic stress on the family unit. And so managers with dependents living at the facility will oftentimes create a problem.
Tom, we are getting a little close on time here, and we've got a lot of questions. So maybe after you go over these next few bullet points, we can go to the questions.
Okay, sure, no problem. Suspicious or unexplainable break-ins are indicative of problems occurring at the facility. Excessively high delinquencies is the number one indicator of theft and embezzlement occurring at a storage facility. If you have really high delinquencies, then you should be using a lot of postage because you're sending out a lot of delinquent letters. So if you see high delinquencies and low postage, then you know that you need to audit that facility because those two statistics should be moving together. If delinquencies escalate, then postage usage should escalate and vice versa. Suspicious expenditures and petty cash. Assistants are not allowed to actually call delinquent customers, another danger signal. Or if you see a high number of manual receipt books being purchased at a storage facility that is computerized. In theory, usually about one manual receipt book per year is more than enough at your average self-storage facility. Customers that vacate and rent in the same day. This is a technique called churning. And oftentimes what happens is the managers will vacate the customer, they'll write it off to uncollected rent and fees, pocket the money, and then turn around and rent the unit right back again on the same day. So that's a severe danger signal if you find that. Managers that never want to hold an auction, and anything that seems unusual usually is. So that's a list of danger signals that you want to kind of keep in the back of your mind. If you notice 2 or 3 of these danger signals, it's time to do an audit at that particular storage facility. Do you want to take some questions now?
Absolutely. The first question I have is, we conduct audits on a yearly basis. Our managers have asked for our search criteria so they know where they need to improve. Do you think this is wise?
I think you need to audit on a more frequent basis than just once per year. And I I think what they're asking for is they're wanting to find out whether or not they're doing a good job. So I think it's okay to actually share the results of the audit. I don't know that I would tell them what I'm looking at, but I find that when I conduct audits at storage facilities, if the managers are doing something wrong, they're eager to find out about it. So I notice sometimes when I sit down and I look at rental agreements and they'll watch me write things down, they'll say, well, did I do something wrong? And I'll say, well, yeah, the problem with this rental agreement is. So that's what managers really want, is specific feedback, because most managers want to do a good job.
Okay. Another question we've received, actually more than once, is how often should an owner hire an outside consultant to audit a facility?
If I give you a fish, I will feed you for a day. If I teach you to fish, I will feed you for life. So what I like to do is I like it when my clients hire me and then they let me work with someone for a day, like the accounting person on their accounting staff, and I actually teach them what I'm doing. I think that's a good approach, because auditing is something that you want to do constantly. It's not just a once a year or twice a year event. If you want just a third party to just oversee the facility and do what I call asset management type auditing, then I think once a year is more than adequate. But my personal preference is that I want to teach someone the intricacies of auditing so that they're protected all year long. And then if they occasionally call me or anyone else in this industry that does audits, and there are a lot of us that do this, by the way, that you would want to use this on a periodic basis, probably once a year. I have one client in Florida that actually has me audit all of their facilities every other year. But they have a strong management structure, and they have several very good property managers.
Great. Another question on this area is, should an area manager audit a facility they oversee, or should they audit a facility in another area? It would be easy for the area manager to overlook things or give a heads up so that they don't look bad.
Exactly. Yeah, I think an area, if you have the luxury of having area managers, then they should audit facilities that they don't control, because it's a very good point in the question, because what we have a tendency to do is we have a tendency to pigeonhole. We have a tendency to think that, well, I know Ron and Betty are my best managers. I won't look as closely at Ron and Betty's facility because I know them. And I think what you have to do in the auditing business is you have to be detached. One of the best ways to be detached is to audit someone that you're not familiar with. It's a much better way of doing it.
Great. Another attendee has asked or has stated, I was surprised to see that many managers are repeat offenders. Why does an owner retain a manager who's stealing?
Well, it's not so much that the owner retains them. It's that they leave the facility, they get into the system, and they get rehired by someone else that doesn't really do any due diligence in terms of checking their background. And so, this one guy that I've caught 4 times and this couple that I've caught 3 times. In all of those cases, the owners were so happy to find someone that they thought was experienced, confident, and that could just walk in the door and solve all the problems immediately, that they didn't take the time to engage in any due diligence. Now, it's easy to engage in due diligence nowadays because, for example, one of the things that I do when I'm interviewing people is I will say to them, one of the things that I do before I hire someone is that I do a criminal background check and I do a credit check. Is there anything that you would like to tell me now before I would do either one of those? And it's amazing how often people will come out and say, well, you're going to find that I have a road rage conviction, or I have a DUI, or you're going to find that I have really bad credit. Now, that may not necessarily take them out of the running, if you will. But it's amazing how often storage managers that are repeat offenders will just walk right into storage jobs with other companies, and the company do absolutely no investigating all into the background.
Hey, how do you suggest sterilizing a facility after employee turnover?
The best way to sterilize is to get into the facility, uncover the problems, that are there, and then to take those problems and eliminate them if possible. Matter of fact, I even like to take the old documentation and get it completely off-site. But if you don't go in after theft and embezzlement has occurred, and if you don't tighten things up and change procedures, then new employees coming in will actually learn from old employees, and they'll even develop what I call a hybrid technique. They'll actually learn what you didn't see or what you didn't catch in your audit, and then things oftentimes will mushroom and get even worse. I have one facility in Northern California where they actually went through 3 sets of managers that were embezzling, and they all kept learning from one another. And it's partially because the owner decided to promote the assistant manager to the manager's position. And then, of course, the assistant manager just basically did what the old manager had done, except with a different twist. So it's important to go in and sterilize the facility. In other words, uncover what the problems were, find out where the weaknesses were in your procedures, and then seal up those holes, and then monitor things much more closely in the future.
Tom, we'll try and answer a couple more here real quickly. We have so many questions that we won't be able to get to today, but we will answer them by email. One question we've been asked several times is, how do you determine who is a qualified outside auditor?
A qualified outside auditor would be someone that has experience specifically in self-storage. I oftentimes find that, even CPAs sometimes will chase their tail in storage. I'll give you a quick example. The other day I did an audit down in Florida, and I found a unit that had a lock on the door, but the unit actually showed vacant in the computer. So the property manager that was with me said, wow, I think we're onto something. And I said, well, not necessarily. I said, we'll write this down, and we go back to the office, we'll ask the manager. And so the property manager said, well, aren't you going to pick the lock and open the unit and see who it is? I said, well, let's go to the office first, and let's take everything that we've discovered, and let's listen to the manager's explanation. So we got to the office, and I said, hey, help me out on this one. I said, B146 shows vacant in the computer, but there's a lock on the door. And the manager said, oh, yeah, that's the guy from F12. He's actually transferring from F12 to B6, and it's taken him a couple of days to do that. Now, I know from experience that happens in self-storage, and none of the software packages really account for that. So I believed his explanation. Now, I could have picked up the phone, I could have called the tenant, I could have verified it. Sometimes, if you're not familiar with the intricacies of self-storage, you may chase your tail for a couple of days sometimes on something that's just an innocent transaction or an innocent procedure. So if you're going to hire an auditor, you really need to hire someone that's experienced in self-storage. Ostensibly, it should be someone that has worked in property management and that has maybe a background in accounting. And I think they make the best auditors.
Okay, and then one last question. Who should know the schedule of the auditor? The district manager has a habit of telling when the auditor is coming to certain managers.
Actually, the thing to do, and this works really well, is let's say you hire an outside auditor. You hire the auditor. You give the auditor a list of the facilities that you want audited, and it should be up to that auditor's discretion to walk into that facility anytime for a prescribed time period. Now, this is what I do with a couple of my clients. We actually send a letter out at the beginning of the year. The letter says that we have retained the services of Tom Litton. He's a professional auditor. He will visit your facility at some time during this year, and when he visits the facility, he will present an authorization and a business card. You are to cooperate with him, open any and all doors, and give him access to any and all computer files, business files, and documents, and you are to also give him the password to the software. And so we send that letter out to the managers at the beginning of the year, and even my client doesn't know when I'm going to show up. I think that gives you the maximum amount of deterrence for the year. In my opinion, that's the best way to approach it.
All right, wonderful. Well, I have been asked throughout the webinar today where your book is available, and if you are interested in Tom's book, which is Auditing Self-Storage, Preventing Employee Theft and Embezzlement, it is available from our website at ministoragemessenger.com. We'd like to thank everyone for attending today. We hope we've provided you with useful information to assist you in the auditing process. For more information on Litton Property Management, you may call Tom at area code 209-334-3800. And in addition, we'd like to let you know that you'll be receiving an email shortly with a link to the archived presentation, along with an opportunity to purchase Auditing Self-Storage, Preventing Employee Theft and Embezzlement, at an exclusive discounted price as a webinar attendee. So be sure to watch your email for this. And thank you again for attending, and have a wonderful rest of the day.